Welcome to the Compliance Officer's Playbook podcast. So, you're facing all these new crypto regulations and trying to understand how we got here.
Right.
Well, imagine it's 2019.
Okay.
The crypto world is booming,
Yeah.
but it's also incredibly messy.
Yeah.
How did the EU go from this kind of fragmented landscape to a single set of rules for the entire block?
That's a great question. To understand MiCAR, we really need to kind of take a trip back in time to the pre-MiCAR era. Think of it as like the Wild West of crypto.
Oh, yeah.
Back then, the EU's approach to crypto regulation was well fragmented.
Okay.
Each country had its own interpretation of the rules,
Uh-huh.
and it created a real compliance nightmare for businesses that were trying to operate across borders.
Okay, so a bit of a regulatory patchwork.
Yeah, exactly.
What were some of the biggest challenges this created?
I think the biggest issue was this lack of a level playing field.
Okay.
Some countries like Germany had really strict licensing requirements for crypto firms,
Right.
whereas others like Malta were creating these special regulatory sandboxes to try and attract crypto businesses.
Interesting.
So this made it really difficult for companies to know which rules to follow.
Yeah.
And it created opportunities for what we call regulatory arbitrage,
Okay.
which is essentially, firms could shop around for the most lenient jurisdiction.
So imagine trying to run a saloon with different sheriffs on every corner,
Right.
each with their own idea of what's allowed.
Exactly.
Sounds a little chaotic. What about consumer protection? Was that a concern in this Wild West environment?
Oh, absolutely. The lack of consistent rules left investors extremely vulnerable.
Right.
This was a time when initial quiet offerings, or ICOs as they were known, were booming,
Okay.
many of which turned out to be scams.
Right.
And because there was no EU-wide framework for regulating these offerings,
Yeah.
investors had very little recourse if things went wrong.
It sounds like the fifth anti-money laundering directive, or 5-AMLD,
Yes.
was in effect at the time.
Hmm.
Didn't that offer some protection?
It did. It was a good starting point.
Okay.
But it primarily focused on preventing money laundering and terrorist financing.
Okay.
So while this was important, it didn't really address many other crucial aspects of the crypto world, such as investor protection or market integrity.
So it was kind of limited in scope.
Very much so. And for example, the 5-AMLD didn't actually regulate the issuance of new cryptocurrencies,
Okay.
which is what allowed this whole ICO boom and subsequent bust to occur.
So you have this fragmented regulatory landscape,
Yeah,
consumer protection gaps,
right.
and the rise of these new complex financial instruments like ICOs.
Yeah.
That must have raised some serious red flags for regulators.
It certainly did. Concerns were growing about the potential for what's called systemic risk.
Okay.
The idea that problems in the crypto world could spill over and impact the traditional financial system.
Got it.
The lack of oversight also made it really difficult to monitor and manage potential threats like market manipulation and fraud.
Let's dive deeper into those national differences you mentioned. You mentioned Germany and Malta.
Yes.
Can you give us a bit more detail on their approaches?
Sure. So Germany, with its very strong tradition of financial regulation, took a very cautious approach.
Right.
They classified certain crypto assets as financial instruments.
Yeah.
And this subjected them to the oversight of their financial regulator, BaFin.
Okay.
And this meant that crypto firms operating in Germany had to comply with really stringent rules on things like licensing, customer due diligence, and risk management.
So Germany was playing it safe,
Very much so.
wanting to make sure everything was above board before allowing crypto businesses to operate.
Exactly. On the other end of the spectrum, you had Malta, which was actively trying to position itself as a blockchain island.
Okay.
They introduced a specific framework for crypto assets, the Virtual Financial Assets Act,
Okay.
and this created a much more flexible regulatory environment.
So Malta was rolling out the red carpet for crypto businesses, hoping to attract innovation and investment. That's quite a contrast.
It is.
What about other major players like France? What was their approach?
France took kind of a middle-of-the-road approach.
Okay.
They introduced an optional licensing regime for crypto firms.
Okay.
So companies could register with the French regulator, the AMF, to gain credibility and show they were operating responsibly.
Right.
But it wasn't actually mandatory.
Interesting. So not as strict as Germany, but also not as open as Malta.
Precisely. And, that's just 3 examples.
Yeah.
Across the EU, you had this real mix of approaches, creating a lot of confusion and uncertainty for both businesses and investors.
Yeah, I can imagine.
And it became clear that a more harmonized approach was needed.
And that's where MiCAR enters the picture, right?
Exactly. The EU recognized the need to bring order to this Wild West
Okay.
and create a level playing field for everyone.
So the stage is set. We've got a booming but messy crypto market, a patchwork of national regulations and growing concerns about investor protection and market stability. It sounds like the perfect recipe for a major regulatory shakeup.
You could say that.
Yeah.
And that's exactly what MiCAR was. A sweeping set of rules designed to transform the EU's approach to crypto assets.
Okay.
But before we kind of dive into the specifics of MiCAR,
Yeah.
I think it's worth taking a moment to appreciate just how different things were in those early days.
Right.
It's this contrast that really highlights the significance of MiCAR and the changes it brought about.
I agree. Understanding the why behind a regulation is just as important as understanding the what.
Absolutely.
So let's take a quick breather to let all of that sink in. When we come back, we'll explore how MiCAR aimed to tame this digital frontier and what it means for the future of crypto in Europe. All right, we're back and ready to dive into MiCAR. So we've established that the pre-MiCAR crypto landscape in the EU was fragmented and honestly a little risky.
Yeah.
How did MiCAR actually go about changing that?
Well, MiCAR was designed to be pretty comprehensive, tackling multiple issues head-on.
Okay.
One of the biggest changes was the introduction of a single EU-wide licensing regime for crypto asset service providers.
Okay, so what does that mean exactly?
Well, it means that instead of navigating different rules in each country, a firm could obtain a single license that would allow them to operate across the entire block.
Well, that sounds like a major simplification for businesses.
Yeah, it was.
Did this affect all types of crypto businesses?
Yes. MiCAR covers a wide range of services, including trading platforms, custodians, and even issuers of new crypto assets.
Wow.
So this meant that for the first time, there was a unified set of rules governing the entire crypto ecosystem in the EU.
So no more regulatory arbitrage, no more shopping around for the most lenient jurisdiction.
Exactly. And this wasn't just about making things easier for businesses.
Right.
It was also about creating a level playing field and ensuring that all firms were held to the same high standards regardless of where they were based.
We talked earlier about those consumer protection gaps in the pre-MiCAR era.
Yeah.
How did MiCAR address those concerns?
Well, MiCAR introduced a number of measures to enhance investor protection.
Okay.
For example, it established clear requirements for the information that must be disclosed to investors before they buy crypto assets.
Like what kind of information?
This includes things like the risks involved, the rights of the investor, and the costs associated with the investment.
Makes sense.
And remember those unregulated ICOs that were often scams?
Yeah.
Well, MiCAR introduced rules for crypto asset offerings, including white paper requirements and marketing restrictions, to ensure transparency and protect investors.
So a bit like requiring those Wild West snake oil salesmen to list all the ingredients on their bottles.
Precisely. Transparency is key. MiCAR also set rules for the way crypto asset service providers handle customer funds,
Right.
requiring them to implement safeguards against fraud and theft.
So it sounds like MiCAR really put a strong emphasis on consumer protection.
It did.
Did MiCAR also address those concerns about systemic risk?
Absolutely. MiCAR introduced requirements for capital adequacy, meaning that crypto firms have to hold sufficient reserves to cover potential losses.
Okay.
And there are also rules around risk management and governance to make sure firms are operating responsibly and mitigating potential risks to both their customers and the wider financial system.
So it's not just about protecting individual investors, it's about making sure the whole crypto ecosystem is on a more solid footing.
That's exactly right.
Hmm.
MiCAR was really a watershed moment for crypto regulation in the EU. It signaled a shift from a reactive piecemeal approach to a proactive comprehensive one.
It sounds like the introduction of MiCAR marked a significant shift in the EU's approach to crypto assets.
Yeah.
Was there pushback from the industry when these new rules came into effect?
There were certainly some who saw MiCAR as overly burdensome,
Oh, yeah.
arguing that it would stifle innovation in the crypto space.
Right.
However, many others recognized that clear and consistent rules were ultimately beneficial,
Yeah.
providing both businesses and investors with much-needed certainty.
It's like building a town on a solid foundation rather than on shifting sand.
Exactly. And remember, MiCAR wasn't developed in a vacuum.
Right.
The EU consulted extensively with stakeholders, including industry players, consumer groups, and academics.
Yeah.
And this ensured that the final regulation was both robust and practical.
So it was really a collaborative effort.
It was.
What would you say are some of the most significant impacts of MiCAR so far?
Well, I think one of the most obvious impacts has been an increase in market transparency.
Yeah.
With clear rules in place, investors are better informed and can make more informed decisions.
That makes sense.
And this has also led to a greater degree of professionalism in the industry.
Okay.
Firms that previously operated in a more informal manner have had to adapt and put in place robust compliance programs.
So it's not just about the letter of the law, it's about raising the bar for the entire industry.
Precisely. And while it's still early days, there are signs that MiCAR is helping to attract more institutional investors to the crypto space.
It's
These investors who previously might have been hesitant due to regulatory uncertainty
Yeah.
are now more comfortable entering the market knowing that there is a robust framework in place.
That sounds like a positive development for the long-term growth of the crypto ecosystem in the EU.
It certainly is. Of course, MiCAR is not a silver bullet.
Right.
There are still challenges and ongoing debates.
There are always going to be new challenges in a rapidly evolving space like crypto.
That's right. But MiCAR has laid a solid foundation for the future of crypto in Europe.
Okay.
It has brought order to what was once a Wild West, creating a more level playing field, enhancing investor protection and mitigating systemic risks.
So we've talked about the why behind MiCAR and some of the big changes it brought about. But the crypto world is constantly evolving.
Yeah.
What are some of the areas where we might see further regulatory development in the future?
That's a great question. One area that's really garnering a lot of attention right now is decentralized finance, or DeFi.
Okay.
These platforms often operate without traditional intermediaries, which can make them much more challenging to regulate.
So how do you regulate a system that's designed to be decentralized?
Well, that's the million-dollar question, isn't it?
Yeah, it sounds tricky.
Some argue that existing regulations can be adapted to cover DeFi,
Okay.
while others believe a completely new approach is needed.
Right.
The EU is currently exploring different options,
Uh-huh.
and I think it's likely we'll see further developments in this area in the coming years.
What about the environmental impact of cryptocurrencies? That's been a hot topic lately.
It certainly has. Some cryptocurrencies, like Bitcoin, use a lot of energy for mining,
Right.
which has raised concerns about their sustainability.
Yeah.
The EU is already taking steps to promote more energy-efficient crypto technologies,
Okay.
and we can expect to see more initiatives in this area in the future.
It sounds like regulators are playing a constant game of catch-up,
Yeah,
trying to keep pace with the rapid innovation in the crypto world.
I think that's a fair assessment.
Yeah.
And it really highlights the need for a flexible and adaptable regulatory framework. MiCAR provides a solid foundation,
Okay.
but it's essential that regulators continue to monitor developments and make adjustments as needed.
We've been focusing on the EU,
Yes,
but crypto is a global phenomenon.
you're absolutely right.
What about global coordination?
Well, we're seeing a growing push for international regulatory harmonization in the crypto space.
Okay.
The Financial Stability Board, the G20, and other international organizations are all working on developing global standards for crypto assets.
So the goal is to create a level playing field globally, not just within the EU.
Exactly. This is essential to prevent regulatory arbitrage and ensure that risks are managed effectively across borders.
Right.
It's also crucial for fostering innovation.
Okay.
If companies have to navigate a patchwork of different regulations in different countries, it can really stifle growth and make it difficult to bring new products and services to market.
So looking ahead, what are some of the key takeaways our listeners should keep in mind as they navigate the world of crypto compliance?
All right, well, first and foremost, stay informed. The crypto landscape is constantly changing, so it's important to keep up with the latest developments, both in terms of technology and regulation.
Yeah.
Subscribe to industry newsletters, attend conferences, engage with experts to stay ahead of the curve.
It's like being a sheriff in the Wild West. You need to keep your ear to the ground and be ready for anything.
Exactly. Second, don't be afraid to seek expert advice. Crypto is a complex area,
Okay.
and it can be difficult to navigate the regulatory landscape alone.
Right.
Whether you're a business or an individual investor, there are resources available to help you understand the rules and ensure compliance.
Good advice. And finally, remember that regulation is not the enemy of innovation.
Absolutely. In fact, clear and consistent rules can actually foster innovation
Okay.
by creating a more stable and predictable environment.
Makes sense.
MiCAR is a prime example of this. By providing a clear framework for crypto assets, the EU has created a space where businesses can innovate and grow with confidence.
This has been a really insightful deep dive into the journey from the Wild West of pre-MiCAR crypto to the more structured landscape we have today. Thanks for sharing your expertise with us.
It's been my pleasure. And remember, the crypto world is full of opportunities, but it's essential to approach it with a clear understanding of both the potential and the risks.
Excellent advice. Thanks for tuning in to the Compliance Officer's Playbook podcast. If you enjoyed this deep dive into the world of European crypto regulations, be sure to subscribe to catch all our future episodes. And for those of you who are really loving the show, we invite you to become a paid subscriber today for just $4.99. You'll get full access to all our premium episodes packed with even more insights, stories, and value you won't find anywhere else. The link is in the show notes.